Good morning, it's Tuesday the 6th of February here in London. This is the Bloomberg Daybreak Europe podcast. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, UBS resumes share buybacks as the lender ramps up its cost-cutting drive.
Chinese equities rebound as Beijing intensifies its efforts to stem a growing market rout.
And King Charles suspends public duties as he receives cancer treatment.
Let's start with a roundup of our top stories.
UBS is pledging to hand as much as $1 billion to shareholders this year. That's after the Swiss lender, which absorbed Credit Suisse last March, reported a larger than expected net loss of $279 million in the fourth quarter. The bank, led by CEO Sergio Ermotti, also increased the amount of planned cost savings from $10 billion to $13 billion. UBS is already the undisputed top wealth manager in many parts of the world. Sergio Ermotti signalling that the United States will be a major plank of its growth strategy.
Now to China. President Xi Jinping will be briefed by regulators on the state of financial markets, underscoring an urgency in Beijing to prop up the country's plunging stocks. The news comes as China looks to tighten trading restrictions on domestic institutional investors and some offshore units. Bloomberg's Yvonne Mann has more from Hong Kong.
We hear Chinese officials have imposed caps on some brokerages' cross-border total return swaps with clients. This is a channel that can be used by Chinese investors to short Hong Kong stocks. At the same time, Chinese brokers who use the channel to buy mainland shares for their offshore units were told not to reduce their positions. Also, we hear some hedge funds have been banned from placing sell orders completely, and still others have been barred from cutting stock positions in leveraged funds. Economists say this could provide some short-term relief, but may be counterproductive as investors worry about their ability to exit the market. In Hong Kong, I'm Yvonne Mann, Bloomberg Radio.
King Charles is receiving treatment for an unspecified form of cancer. According to a statement from Buckingham Palace, the illness was discovered during the King's hospital stay last month. The palace says doctors have advised the 75-year-old monarch to postpone public-facing duties. Christina Kyriakou, former Communications Secretary to the King, says he will be adequately assisted in recovery.
There are more than enough people to assist. And this is what happens in every family. If someone gets ill, everyone splits the duties. I feel certain that the King will be incredibly well supported, not least of which by the Queen as well.
Former Royal Communications Secretary Christina Kyriakou there. The news comes less than a year and a half after the death of Queen Elizabeth II and follows a recent stay in hospital for the Princess of Wales, who underwent planned abdominal surgery.
Now to a story around tech workers. 32,000 tech workers have lost their jobs since the start of the year. This according to a firm that tracks cuts in the industry. Layoffs.fyi says that many firms are still trying to correct their overhiring that took place during the pandemic. The latest data point comes as social media firm Snap announced that it is reducing its workforce by about 10%. In recent weeks, Amazon and Alphabet also announced cuts aimed at reducing costs, while the sector makes greater use of artificial intelligence.
The Bank of England's chief economist says the monetary policy outlook has shifted. Hugh Pill says the central bank could lower rates this year as a reward for the economy for bringing inflation down. James Wilcock has the details.
Many in the financial sector will be wondering if they'll be getting a reward for good performance at this time of year. Bank of England chief economist Hugh Pill says you might. He told the press that if the UK got a good score on its inflation metrics, he expects a performance-related bonus in the form of a rate cut. One area for improvement, though, revised labour market data, which suggests a tightening jobs market. That means Pill's focus, like his language, is likely on wage data coming next week. In London, James Wilcock, Bloomberg Radio.
UK retail sales growth slowed in January in another sign of weak consumer demand. The British Retail Consortium says that the rate of increase was just 1.2% last month. That's lower than the 3-month average and also lower than the pace of inflation. While the volume of food sold saw its largest growth in over a year, sales of big-ticket items such as furniture and household appliances remained poor.
Germany's finance minister says the country's far-right AfD party is a risk for the economy. Christian Lindner called out threats to international investment posed by the group at a Bloomberg event in Frankfurt. He also said the party's discussion of leaving the EU would cripple Germany financially.
Für jede For every party of the Democratic Centre, such as the CDU, CSU and the SPD, and of course the Greens, any form of cooperation with the AfD must be ruled out. With a party that casually talks about Germany leaving the European Union, which would ruin us economically, with a party that Marine Le Pen warns against, there must be no cooperation whatsoever. A party like the AfD must not have any power over the state.
Lindner added that any cooperation with the AfD should be ruled out, and that the issue came up as he tried to promote Frankfurt as a potential home for the EU's new anti-money laundering agency. The news comes as a growing number of business leaders are voicing concerns about the rise of the far right. Deutsche Bank CEO Christian Lindner said last week that populist platforms lead directly to economic decline.
And those are our top stories.
In a moment, we'll dig into those results from UBS and get more on King Charles's cancer diagnosis. But another story that caught our eye this morning was about the risk of Zoom calls and how the rise of deepfakes is causing some trouble. This is a piece from our colleague Parmy Olsen from Bloomberg Opinion has been writing about this after a finance worker in Hong Kong transferred $25 million to scammers who were posing as a CFO on a conference call. This
is really, really troubling, isn't it? Because a year ago, you never would have talked about kind of deep fake videos. You wouldn't have been perhaps so wary of a Zoom call. I mean, unlike a kind of phishing email or a scam text,
exactly.
Quite kind of used to having to look very, very carefully at the phone at that. But now, the Zoom call too.
Yeah, the idea that somebody could be telling you, because essentially the story in Hong Kong happened because that worker got a suspicious email, was worried about it, asked for clarification, ended up on a live conference call with these people. Wow. Now, so Parmy in her piece has a number of pieces of advice beyond the usual multi-factor authentication and the like, and using secure channels, but, you know, to do things like ask people to make an unusual gesture because movements still haven't been perfected by deepfaking technology. So ask people to scratch their nose or touch their ear, and so that this could actually become the new "Are you on mute?" of Zoom calls, asking people to instead demonstrate that they are actually who they say they are.
Having to outfox, you know, real-time deep fakes. Yeah, that's a new one.
As the tech is evolving as well. Yes, that's a piece from Parmy Olsen this morning. Well, let's get more details next on the results we've had out from UBS. The bank announcing that it's resuming share buybacks, upping its cost-cutting targets, as well as it reported a bigger than expected loss in the fourth quarter of the year. We have Bloomberg Senior Finance Editor Stefania Bianchi with us for more. Stefania, good morning to you. Take us through some of the headlines then. These are the first full year results from UBS, including Credit Suisse.
I think one of the key headlines, as you've said, is this share buyback that was paused during the integration of Credit Suisse after that deal was done. So they've now said they're going to restart this buyback in the second half for as much as $1 billion. So this was a key point that investors were looking out for. Another key point to mention is that they've confirmed the profitability target for the coming years. This chairman had mentioned that they were probably going to exceed that, so it seems that they're sticking with that plan and hoping that they will actually be able to achieve that. In terms of cost savings, they're looking to now save $13 billion in the coming years. So this is slightly higher than the $10 billion that they'd mentioned earlier. So this really is quite an ambitious plan for these cost savings, and it will be interesting how they're looking to achieve this.
That is interesting. And of course, there's a TLive blog on the Bloomberg terminal, TLive Go, for all of this commentary, as well as your expertise, Stefania. The 3-year strategic plan, you know, this is also what we're expected to hear alongside these quarterly results. In terms of the fiscal targets, you mentioned some cost savings, very important, but there's also a plan for some expansion. Will we hear any more about potential M&A or what the future may hold for UBS?
Of course. I mean, we will be speaking to the senior executives later on today, and hopefully we will ask about that. But it is a difficult time. It has been a difficult time for European banks, not just European banks, US banks. And in terms of M&A, obviously interest rates have been impacting them as well. A lot of them have actually been reporting job losses. So it's not the easiest environment for them. They have said as well, in terms of the Credit Suisse integration, this could be one of the most difficult times coming up. And investors really are trying to put pressure on them, and they want to see the results and they want to see the benefit from this integration with Credit Suisse. So it will be an interesting few months ahead for them.
Stefania, client outflows had been a huge focus in the run-up to both the collapse of Credit Suisse, but then those key months after UBS took over that business as well. What sort of signals are we getting out of these results in terms of the interest from clients?
Well, they've actually said that they've managed to secure about $77 billion worth in new assets during the period. So this shows that the client win-back does seem to be working. They do seem to be feeling fairly secure with this new setup and with the integration of Credit Suisse. So they'll obviously be looking to capitalise on that going forward.
In terms of their capital ratios and the kind of stability of the business, again, we've had out numbers as expected.
Yes, that's right. There really hasn't been, a huge surprise there, which is obviously a good news for the banks. So let's see if they can carry on doing that for the next quarters.
OK, Stefania Bianchi, our Senior Finance Editor, thank you very much for joining us with the details of those results from UBS and that headline news that they are returning to share buybacks of $1 billion planned for this year.
Now, Buckingham Palace announced yesterday that King Charles has been diagnosed with cancer and has begun treatment. Joining us now to discuss this story of interest, particularly here in the UK, Bloomberg's Tiwa Adebayo. What do we know, Tiwa, about the King's illness and treatment so far?
We do know that, at least as of yesterday, according to the statement, the King has begun a schedule of regular treatments. The Palace have also said that this is not related to treatment that the King received last month for an enlarged prostate. They haven't disclosed exactly what sort of cancer it is, but they have said that prostate diagnosis was benign. There is a sense of optimism, actually, in the statement too. The Royal Communications team have said that the King is looking forward to returning to full public duty as soon as possible. And actually, the last couple of lines of that statement did catch my eye in particular, because it does offer some sort of explanation as to why this information is being shared and why it's being shared now. So it says that His Majesty has chosen to share the diagnosis, and I'm just going to read from it here now, to prevent speculation and in the hope that it may assist public understanding for all those around the world who are affected by cancer. And these couple of lines are particularly interesting because they do offer a sort of break from tradition for the Royal Communications team, which is generally extremely factual and to the point with these sorts of statements. I mean, announcements talking about royal births, for example, are typically only a couple of lines long. And looking back to last month, when the communications team released a similar statement about the King's treatment for an enlarged prostate, it was very short, just 4 lines long, highly factual in tone, and released after his discharge from hospital. All that statement did essentially was acknowledge that his engagements had been rescheduled and thank his medical team. And this statement definitely does have a different feel to it.
Tiwa, of course, the King is the head of state in the UK and also in Commonwealth countries as well. What do we know about the functioning of government during this time and his key role?
So when it comes to what we know about what the King will be doing and what he won't be doing in terms of his duties, the statement does say that the King will continue his non-public facing duties. So according to the statement, he will continue to conduct state business and official paperwork as usual. This is likely to include the reading and signing of government documents. They're famously delivered every day to the monarch in a red box. Some of those documents, of course, will require a signature from the monarch to formally approve legislature through royal assent. He may also continue his weekly meetings with the Prime Minister. That's a duty that's highly important in the royal household. It's something the King won't want to suspend completely, and there is actually a precedent for these meetings being carried out over the phone. The late Queen Elizabeth II hosted her weekly audiences in this way during the COVID pandemic. The Buckingham Palace team says that the King has been advised to suspend public-facing duties. And looking at the court circular, that's the section of the royal website which shows which engagements have taken place and who's conducted them. This has actually been the case from sort of the end of last month. The King has obviously been receiving treatment for that enlarged prostate, so a lot of engagements being undertaken by Princess Anne and other royals. There are members of the family who hold a position called Councillor of State, and these are individuals who are appointed to act in the King's place should he become unwell and unable to undertake official duties. By law, these are the sovereign's spouse, so Queen Camilla, and the next 4 people in line for the throne over 21, since both Prince Harry and Prince Andrew have stepped back from those official duties recently. The King did actually name his siblings, Princess Anne and Prince Edward, as councillors of state in 2022. So it's likely that we will see them also step in place in the coming weeks.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.